maritime and aviation sectors. And the primary objective of the exercise is thought-leading and provoking industry engagement towards the provision of tax laws and administration that stimulates rather than cripple the industry for development. Our keynote speaker today is our very own Kilian Kanoba, a partner with the tax practice in Pedabo, who will be sharing a brief on the sector's development over time and contentious tax issues. Subsequently, we shall proceed to the interactive panel session, which will be moderated by Kilian, who will steer the discussion to address the industry challenges. We have carefully selected, along with our speaker, industry leaders from the private sectors to speak alongside their public sector counterparts to ensure a holistic perspective, whilst of course taking questions from our esteemed audience, most of whom are industry players. Our insightful panelists on this session include from the FRS, Mr. Matthew Bojubola, the team lead special taxes, Mr. Adeni Orebajo, Director, Tax Policy and Strategy, Mr. Sunday Okeowo, Acting Director, Special Tax Audit, and Mr. Abdullahi Aliyu, Tax Controller, Non-Resident Persons Tax Office. And from the industry, we have representative of MASK, Mr. Sebastian Odima, Head of Tax Controversy. And from UPS, we have Mr. Yinka Sumonu, Chief Financial Officer. And representing Pedabo on the panel is my co-founder and our managing consultant, Albert Folonshaw. We expect the panel session to be very impactful and engaging indeed. And of course, we look forward to taking questions from our participants. I will always take the opportunity to talk about our firm, Pedabo. We remain a story of consistent, sustainable growth, having evolved to be one of the leading professional services firms in the country over our 23 years of existence, offering services in the areas of tax, audit assurance, and advisory through three entities: Pedabo Professional Services, Pedabo Audit Services, and PAL Nominees. Our vision of providing exceptional service with an assurance of timely solutions delivery to meet our clients' bespoke needs through collaboration and the competencies of our warm professionals and dependable team is one we continue to pursue with fervor and diligence. I always acknowledge the presence of choice, and as such, to our clients, I say a big thank you for choosing to continue to collaborate with us. To our guests, we welcome you to get a preview of our capacity during this forum, even as I wish you all an impactful session. Once again, thank you and welcome.
Thank you very much, Mr. Ajibade Fashino. We'll be moving to the next item on the agenda, and it is the host address. So we'll be inviting the Executive Chairman of the Federal Inland Revenue Service to come forward to declare this event open as the chief host of this thought leadership session. You're welcome, sir. I'm just hoping the cameraman will capture me with you.
Please, because you guys are too numerous for me to mention one after the other, I will make a compassionate appeal that my brother have already established some protocols. You allow me to stand kind bear on that. Let me begin by congratulating the staff and management of Pedabo Professional Services, particularly my neighbor, my brother, friend, Mr. Albert, for blazing the trail in ethical practice. Distinguished ladies and gentlemen, it is my utmost pleasure to join you at this edition of the Leadership Thought Breakfast session, which is focused on tax issues and their impact on development in the maritime and aviation industry. It is fitting to start by acknowledging the critical role of the maritime and aviation industry in the economic development of our country. From time immemorial, the shipping industry had been the major means of transporting goods and people. Rapid growth in aviation technology also made rapid movement of business, people, and perishable goods possible. The combined impact of both modes of transportation is exponential increase in volume of trade, as Nigeria was able to trade with people in the remotest parts of the globe. Over the last few years, the global economy has witnessed persistent violent shocks. The advent of the COVID-19 pandemic in 2020, leading to serious economic downturn, has dug very wide hole in government's revenue. A major consequence of the ongoing COVID-19 induced economic recession has reduced demand for crude oil. The Nigerian economy and government revenue, which are largely petroleum dependent, have taken a big hit. The only viable and sustainable option for the government is diversify its revenue source by opening up new and reviving hitherto abandoned sources. As important as the maritime and aviation industries have been to the economic development of our country, tax revenue yield from these two industries have been very, very negligible. The low tax revenue performance of the two industries can be attributed to many factors, chief of which is the failure of foreign companies lifting cargoes, particularly crude oil cargoes, to pay taxes in Nigeria. This is contrary to the provisions of the existing laws as they are today. The revenue leakage from these non-compliant liners is very, very huge. Tax authorities are unable to police these foreign companies because the transportation contracts are executed outside Nigeria, and the tax authorities do not have the lifting schedules of the vessels ahead of their arrival in our country. Fellow tax practitioners, ladies and gentlemen, a new dawn has come to tax compliance in the maritime and the aviation industry. The FIRS will soon launch a tax audit exercise on operators in the maritime and aviation industries, back-end pre-audit activities in collaboration with the regulatory authorities in the industries are at advanced stage. Let me use this opportunity to invite all foreign companies that have lifted cargoes, including crude oil, out of Nigeria without paying tax, in line with the extant law, to voluntarily come forward to regularize their tax positions. Those who will wait for FIRS audit before doing the right thing may find the test of our visit absolutely unpalatable. Similarly, I also invite my fellow tax practitioners to educate and encourage their clients who are in default of tax to make amends as soon as possible, and if possibly, immediately. This call has become necessary because taxation, as I've always reminded those that we talk to, has gone beyond being a mere tool for raising revenue or a mere civil obligation of citizens. Tax is fast becoming the defining factor for government's existence, socio-economic developments, and international relations. The whole world is engulfed in a tax war, or you call it a tax race. In days ancient, nations went to war to capture land for its inherent natural resources. Today's world is about tax. The inability of the inclusive framework to reach a consensus on the tax questions around the digitalized economy is a clear testimony that tax is the new resource for which people go to war. The statement published by the inclusive framework after a long-drawn negotiation clearly indicates that each country must clear a path for itself. The lack of consensus is in itself an eye-opener, particularly for developing countries like our own. Finally, ladies and gentlemen, I urge you to use this leadership thought session to identify the challenges mitigating against tax compliance in the maritime and aviation sector and suggest ways of reversing the trend. Let me assure you that your recommendations shall be taken very seriously. Thank you very much.
Please, let's continue to appreciate the chairman. Thank you very much, sir. Please be seated. The chairman has made so many important points, and I think the message from the chairman is clear. Tax is a very, very important resource for the development of Nigeria. And he also acknowledged the fact that the maritime sector and the aviation sector play a critical role in the development of the nation. And I think those who play in this sector should be proud of themselves because they are actually contributing a lot to the development of Nigeria. Please appreciate yourselves, please. And Mr. Chairman, one thing that I know about taxpayers is that when they hear about incentives, they are always very happy. And permit me to say here that you have invited them to come forward to regularize their tax position, and I believe it comes with some form of incentive. Thank you very much, Mr. Chairman. Okay, so the next item on the agenda is the keynote address to be delivered by my boss, a very, very intelligent young man. By the way, he clocked 50 recently. He is a partner with the firm, and he has been involved in service delivery to clients in financial services, banking, manufacturing, telecommunications, information technology, oil and gas, virtually all sectors of the economy. He is a fellow of the Institute of Chartered Accountants of Nigeria. He is also a fellow of the Chartered Institute of Taxation of Nigeria. He holds an MBA degree from Ambrose Ali University, Ekpoma. He has over 27 years of professional experience in taxation, audit, and financial management consulting. He commenced his work career with the firm of Ijewere & Co., Chartered Accountant and Chartered Tax Consultant, where he rose to become manager in charge of the firm's up-country operations with bases in Abuja and Kaduna in 2001. He was later moved to Lagos in February 2007 as lead consultant in charge of group of clients operating in various sectors of the economy. His over a decade sojourn at Ijewere & Co. afforded him the opportunity to provide services at strategic levels to companies with diverse business interests and structures. I believe that this keynote address will touch on various aspects of businesses, whether you operate in the maritime sector or the aviation sector or any other sector of the economy, because I trust this speaker to do justice to the topic to this topic. So please join me in welcoming our keynote speaker, Mr. Kilian Kanoba.
Mr. Chairman, Federal Inland Revenue Service, Directors of Federal Inland Revenue Service here present, my bosses, the founding partners of Pedabo, my colleagues at Pedabo, and my colleagues at the Federal Inland Revenue Service, my esteemed clients, ladies and gentlemen, good morning to you all. I think I have the simplest of tasks this morning. I am the rabble-rouser for today. My work here is to instigate and stimulate conversations, which the panelists are expected to do justice to later in the day. And so mine is just to bandy words and throw figures at you. Yours is to catch it and do the right thing to it when we are discussing later. I think the chairman of the Federal Revenue Service has already set the tone for today's conversation, and that is the fact that taxation is not just a civic duty anymore. It is the lifeblood of any serious economy. And that is why in the recent years, we've been hearing a lot about tax to GDP ratio. Nigeria has been stagnated at about 6%, and there's been a lot of work being done by the tax agencies with government, trying to modulate and modify the fiscal framework, the fiscal policy of government to ensure that we are able to generate more taxes and improve on the tax to GDP numbers of Nigeria. So every progressive economy relies on taxation. You've heard of course, let us not digress, the issue of the Dutch costs, and that comes with reliance on natural resource. Nigeria is probably one of the worst victims of the Dutch costs. However, tax is a cost to business. And we know that tax, being a cost, serves also as a disincentive. Everybody who is rationally minded will want to avoid paying tax if he can. And that is why the issue of tax policy becomes a balancing act that every government must continue to work on to decide what do we tax, when do we tax, what and how do we tax is a question that must be answered at every point in time. Coming to the business of the day, shipping and aviation. These are critical sectors, like the chairman has said. Without these industries, everybody will probably just be stuck in his little island. We remember the story of Gulliver's travels and all the rest. Okay, but these industries have evolved over time. You can literally move goods from Nigeria to anywhere. You can order goods from the US and you find them here. It's only possible because of the development and the evolution in these two key sectors. According to insights from market prospects, about 2/3 of the world's volume of goods are moved through marine transport. And interestingly, China contributes about 20% of freight movement. And 90% of goods shipped in and out of China are done through marine transport. And that is something that every country that seeks to develop its industrial sector should envy and try to emulate. Now, looking at our industry, shipping contributes an average of 1.6% to our GDP. Over the last 5-6 years, it's grown by just about 3%. And the highest growth was recorded in 2016, where it grew by 8%. And as at 2019, Q4, the growth has shrunk to 1.87%. Of course, with COVID, we can only imagine what the figures are in 2020 and 2021. Now, but if you also look at our shipping industry, it is being estimated that it probably costs about 2 times to ship a container to Apapa port than it will cost to ship the same container to Cape Town in South Africa. And yet, Cape Town is a longer distance. Even the Lagos Chamber of Commerce has also estimated that the productive capacity of the country is reduced by about 3% each year due to the problems that are associated with shipping and clearing of goods in the Nigerian ports. And according to them, 65 to 80% of the time spent clearing goods is caused by the activities of government agencies operating in the port. And this is something that even the federal government is aware of, and I know there have been initiatives to tackle this challenge through the executive orders that were issued, I think, in 2017 or 2018. But how successful this initiative have been, it's a question that I'm sure we all can still answer if you are involved in this industry. Taxes payable by by airlines in Nigeria. If you look at airlines have complained that about 40% of the price of a ticket goes to the payment of various taxes, charges, levies, and all of that. And according to them, taxation coupled with the cost of aviation fuel, coupled with the difficulty in accessing foreign exchange to enable you to repatriate income are some of the things that makes operating in the airline industry a very tortuous one in Nigeria. A very damning comment has been ascribed to some operators of foreign airlines that the Murtala Mohammed International Airport is probably one of the most expensive airports to fly into across the world. Prohibitive costs, according to them, is mainly due to the multiplicity of taxes in our airports. And this multiplicity of taxes, some of them are just charges, levies, because of the various government agencies that are operating in the airports. And the seaports, of course, are not an exception, like we have said. Agencies operating in Nigerian airports and seaports, in fact, I have counted about 16. There's probably no need to enumerate them. We are very familiar with them. Now, globally, how are shipping lines and airlines taxed? For the past 100 years, over 100 years ago, 2 leading countries in international trade, the UK and the US, they promoted the idea that, look, because of the complexity of a shipping line, the operations of a shipping line, a ship can probably call at 50 destinations in one voyage, for example, depending on what it is carrying. It becomes difficult for you to truly tax that ship in each destination where it drops its cargo. And if you don't simplify the process, you are likely going to create a double taxation situation. And on the basis of this understanding, there was a consensus that international shipping lines should be taxed on their profits only in the country where they are resident. Of course, over time, and through the evolution of the double tax treaties and all of that, there has also been an agreement that, yes, you should be able to tax the income of the shipping line accruing from the carriage of goods and people from your territory. And that's the practice that we are all used to. But again, the chairman said it, tax is war. there has been a lot of practices in the international space by shipping lines when, of course, some people decided to be crafty. And then you now began to have the issue of open registries, because a ship must be registered somewhere, okay? And it is where it is registered that its income taxes are supposed to be paid. And so you found some countries who have now found a way of creating or diverting ship ownerships or ship registration to their territories. And that is why you look at, right now, Panama has about 1/3 of all the ships that are sailing in the world registered in their territory. Interestingly, Liberia is only second to Panama when it comes to ship registries. And why? Because they have granted incentives and said, look, come and register your ship with us. You will not have to pay income tax in our country. Okay? But you pay a fee to get registered, you pay a licensing fee, annually you pay, and then they are raking in revenue for providing absolutely nothing. And what has happened is, over the years, most ships are not registered in the territories where they are actually owned. And I think Nigeria, if we check very well, we will see that Nigeria is not an exception. Now, what countries have also seen these, and normally, like Chino Achebe said, when the hunter learns to shoot without missing, the bird also begins to learn to fly without perching. So it's been a war of wits, so to speak. But countries that are truly the source of this production, what have they done? They have also tried to review their own systems to make their ship owners to keep their ships registered in their countries. And that is why you have the evolution of the tonnage tax system, which is operated in most of the countries that still have got serious maritime activities, including the European Union countries, and the UK, and Singapore, and Hong Kong, and in India. They have replaced the usual system of taxing shipping lines with a tonnage system that just gives you an assurance of a fixed profit based on the weight of your ship. And on that profit that is fixed, you pay the tax based on the tax rate of the country. So this way, shipping lines are not afraid, because the problem with the shipping line especially is that it's capital intensive, and usually their financial performances are very cyclical. So sometimes they have good profits. For many years, they are running at losses. So the tonnage tax system was introduced by many of these countries, and they are beginning to have a number of ships being registered in their territory. Now, the tax competitiveness of shipping and aviation are crucial in view of the strategic roles of the sectors in the economic development of every country. These sectors are known to be very high risk, high cost, low margin industries. So, but if you look at airlines, for example, they are also a very special kind. You look at the financial statement of our airline, you will see that it has a very huge turnover, high revenue. But if you look at the margins, very low margins. And look, based on statistics that are available, a review of worldwide operating results of airlines from 2015 to 2019 shows that the global aviation industry had average pre-tax margins of between 8.5% in 2015, dropping consistently to 5.2% in 2019. Projections for 2021, for obvious reasons, are in the region of minus 20% pre-tax profits. If you look at closer home, African Airlines, these ones have only been managing to reduce losses from 800 million in 2015 down to 100 million in 2018 on the average for African airlines. Of course, I don't want to even imagine what 2020 will be, because we know very many of them didn't fly after the first quarter. Now, we talked about war. When there is war, you attack, you defend. Now, there has been consensus amongst countries who are concerned. Of course, Mr. Awodunbola is very active in this space. The activities of the OECD and all the various initiatives that have been made to reduce the effect of the activities of the tax havens, okay, where multinationals are able to shift their profits to so that they do not pay tax. And this initiative has led to, of course, broad policy initiatives, popularly referred to as BEPS, under the umbrella of Pillar 1 and Pillar 2, to reduce this activity. Pillar 1, for example, Pillar 2, which is more like a combination of the activities under Pillar 1, has its main objective to institute a minimum tax rate for multinational companies from a particular threshold. So you will see that all the activities of the OECD, most of which the FRS has keyed into, they are driving towards an objective. And so recently, I think we saw the institution of CBCR. Every company with a global turnover of above 750 million euros is not supposed to file CBCR reports and all of that. Now, these same companies are expected that coming into force of this deal, that they will pay a minimum tax of 15% on their global revenues. About 130 countries have signed off on this. We understand that 4 have not signed. Interestingly, those 4 that have not signed include Nigeria. And I know there were 2 other countries who were also debating, but I learned they've also agreed to sign. And for those ones, their major concern was that 15% is higher than their own corporate tax rate of about 6%. So if we have to increase our tax rate, companies will run away from our territory. But I don't know why Nigeria, Pakistan, Kenya, and Sri Lanka have not yet signed. We may probably hear that today in this conversation. Now, interestingly, shipping lines have asked, and we understand that they have been granted an exemption from this policy. And there are reasons, the reasons that they have advanced for this exemption are very, very logical. One is the fact that, look, we already have an established method of taxation which has lasted 100 years, okay? And this taxation method, like we have heard earlier, limits our taxes only to the country where we are resident. So if the country where we are resident is fine with our tax rates, then there shouldn't be any reason why you should worry. Moreover, this method have also evolved through the tonnage tax system, which have been accepted by the EU and the OECD. The tax systems are such that shipping companies do not get any deductions for interest, capital allowance, operating costs, intellectual properties, and all the rest, which are the usual tools for tax avoidance by multinationals. We don't get those deductions because we just pay tax on the basis of tonnage. So since we don't get these deductions, we don't really have an incentive for engaging in profit-shifting activities. Moreover, we have got subsidiaries all across the world or agents in the countries where we operate. And the revenue of these companies is already being taxed in those countries where they are. And if we render any services to them and they have to pay us for services, we already pay withholding tax. Lastly, the fact that there are already a lot of charges at the ports. We are already paying tax in one form or the other to the countries where we go to do business. And I think they seem to be winning that argument so far. Coming back home, how do we tax shipping companies and airlines? In Nigeria, every company is a company. As far as CETA is concerned, except you are not under CETA. Well, now, with the Petroleum Industry Act, we know that there is a special regime for petroleum companies. But CETA also recognizes a distinct business for insurance. So there is a provision for how to tax insurance businesses. But for airlines and shipping lines, there is no different method. Every company is a company. There are, however, special rules for taxing foreign companies that are involved in shipping and airline business in Nigeria. And these rules are enshrined in Section 14 of CETA. Section 14 of CETA specifically recognizes as taxable the revenue earned by a shipping line or an airline for goods that are carried out of Nigeria, while for goods or people brought into Nigeria, they are exempted from any tax. Subsection 2 of Section 14 allows for the taxation of the profits of an international airline based on using the methods enshrined in CETA, if the country of residence of the line operates an income tax system that is like that of CETA. So if a shipping line is based in a country, is coming from outside Nigeria and it makes money, it will be assessed to tax on the income it generates from taking goods out of Nigeria, using the rules of CETA if they operate the same rules. But of course, agreeing a ratio, using their tax returns at home to agree the ratio of profit, the ratio for capital allowance, and all of that. Okay? And but like we have seen, very few countries still use that method and still run popular shipping businesses. Subsection 3 of Section 14, however, allows for the computation of income tax on a deemed profit basis on a fair percentage on the full sum receivable in respect of the carriage of passengers, mails, livestock, and goods shipped or loaded in Nigeria. This percentage should, however, not be less than 2%, which means that fair percentage that FRS will impose cannot be less than 2%. The question would therefore be, what is a fair percentage? Who determines the fair percentage? Over the years, FRS has maintained 2%, and they have just been satisfied with that 2%, and there was no quarrel. Everybody has been happy. Now, what is happening now? Of course, because Nigeria is paying greater attention to taxes, there is a need to look at all the corners and look at places where the brooms have not swept before. Now you've got a new broom in Mr. Chairman and his team, and they have to make sure that the new broom sweeps everywhere. And they have been looking at it. And because they've been looking at it, they've been creating ripples, you know. When you shake the water, ripples will come. So there have been disputes. And these disputes have been very interesting for this business. And all the disputes, of course, have been revolving around the interpretation of Section 14. Take, for example, in the dispute between Kenya Airways and FRS, FRS said, look, our fair percentage is not 2%, it should be 6%. And of course, Kenya Airways went on appeal. And luckily for them, the tribunal held it in their favor, that FRS, you've been accepting 2% all these years. So Kenya Airways should be happy, should be right if they believe that 2% was fair. So you cannot now come and say it wasn't fair anymore. So Kenya Airways got away with that. In the shipping sector, the area of difference has been with respect to the basis of taxation of non-freight revenue. And that is the big elephant in the room, at least in the last 2-3 years. How do you tax the income of a shipping line generated out of Nigeria from certain activities, like port handling charges, like demurrage for delaying the return of containers and all of that? The shipping lines have insisted that this cost should ordinarily form part of the voyage contract. When I was bringing the goods from wherever, we agreed that you will return my container within this period. If you don't return my container, you will pay an additional charge. And so because of that, it's still the same operation of bringing the goods that has led to the generation of the demurrage. FRS has insisted that these revenues, on the other hand, are derived from operating onshore in Nigeria, because you are now renting the container out and you are collecting a rental. As far as they are concerned, if you like, call it demurrage, it's a punishment, but it's a revenue to you, and it's a cost to the other person. So there was also a case between CMA CGM and FRS on this matter. Being a French company, CMA CGM had attempted to rely on OECD guidelines to interpret Article 8 of the double tax agreement between France and Nigeria. Unfortunately, the company lost the case on the argument that the agreement that they are relying on is older than the interpretation they are trying to use to interpret it. That's what I read there anyway. The company had argued that the revenue from demurrage or container leasing was part of its operation of ships in international traffic. Now, interestingly also is the fact that many shipping lines were already paying 2% on even this demurrage and all of that. They were already paying, but FRS said, no, this matter is not under Section 14. Tax on this one should be 6%, so give us an additional 4%. And of course, if you look at the Finance Act 2020, Section 14 was amended to kind of provide a clarification that this Section 14 does not affect the incomes that you earn outside of freight. The question, however, still remains, this situation, how does it benefit the Nigerian economy? And like I said earlier, when to tax, how to tax, what to tax is a continuous conversation. But how do other people deal with this? I've taken cases in 3 countries. In the Philippines, the Supreme Court held that demurrage and detention fees, penalties, etc., are liable to income tax and VAT when there was a similar dispute. In Kenya, the High Court held in favor of the Revenue Authority also that demurrage charges earned on delayed containers by foreign shipping lines are liable to income tax in Kenya. The judge held that freight comes to an end at the port of landing, and any demurrage imposed on containers for late return after port clearance is a post-importation charge. That is the interpretation of one of my good friends in FRS too. In India, the tax tribunals, interestingly, they have differed. They've held that earnings in India by foreign shipping lines from activities such as inland haulage, demurrage, and handling charges are within the scope of income derived from the operation of ships in international traffic, and thus not liable to tax in India under the existing double tax agreements. The India Income Tax Act, again, we need to understand that they are a little different from us. They impose a tax, they deem a profit of 7.5% on all your income arising from carriage of goods out of India, okay, and even from goods carried anywhere at all that are deemed to be paid for in India. So they deem a profit of 7.5%, and this gives an effective tax rate of about 3%, because for foreign companies, their income tax rate is 40%. So, but you need to look at, from my own perspective, the Indians have given a different interpretation because they have got interest also in shipping. And so they've got shipping line, they operate the tonnage system, and I think they are probably much more forward-looking, and so they are likely to be more reciprocal in their interpretation, and probably that is the reason why they have interpreted differently. So the question is, do we want to be India? Do we want to be India, or want to be Kenya or the Philippines in these matters? Now, in conclusion, the importance of the sectors cannot be overemphasized. But we know that there are a lot of bottlenecks that are plaguing the industry in Nigeria, and this bottleneck needs to be eliminated so that the sectors can grow. We cannot also fool ourselves by believing that our tax regime for this industry does not need a makeover. I personally think it needs a makeover to simplify it and make it easier to truly tax these revenues in a manner that is beneficial to us as a nation, without necessarily serving as a disincentive to the industry. The shipping business is very complicated, airline business are complicated, and even there is this challenge of how do you even prepare the financial statements of a foreign shipping airline on its Nigerian operations. It's a big problem that I think even auditors are still finding it hard to deal with. When you say file your income tax returns, the question is, what are my costs? You cannot tell me that I'm earning a revenue that has no costs. But because of the costs, because of the intricacies of the industry, it's difficult to be able to isolate those costs that relate to these revenues. So it's a big challenge. So, and again, finally, these revenues, for me, as far as I'm concerned, they are opportunistic revenues. Nobody sets out to do the business of earning demurrage. Nobody sets out to do the business of increasing charges because government charges are also increased. And I think overall, the entire system requires attention of government, and with the cooperation of the industry and practitioners like you here present, the sky will be the limit for our industry. Thank you very much for your attention.
Thank you very much, Mr. Killian Kanoba, for that very, very enlightening presentation. I mean, it was there's so much details in that presentation, honestly. And I think the message, I mean, that Mr. Killian has passed also is very clear. He touched on so many points. He said we should try to eliminate the bottleneck in this industry so that they can truly grow. You know, a lot of multinational companies have faced challenges, you know, with, trying to match cost with revenue, especially when you have situations around deemed income and so on. And, there was a time in the presentation that he talked about, he said that so many questions would have to be answered, maybe during the panelist session. And I know that a lot of participants will be looking forward to that. And I also recall that the chairman had earlier said that he's calling on taxpayers, players in this market to come forward to regularize. And I had said that taxpayers do love incentives. And honestly, Mr. Killian talked so much about the incentive thing and how it has helped some other countries, to boost revenue. You know, we cited the case in Liberia and how shipping companies would rather go there to register, you know, and then the profits which Nigeria is supposed to earn, you know, goes to some of those countries. And I think it is also commendable to hear that the FIRS has indeed keyed into the activities of the OECD, you know, in order to bring sanity to the global tax space. And but one more thing, which everyone, you know, all players in the industry are looking forward to, is Nigeria signing the global minimum tax agreement. And I think the chairman has taken note of that, and you know, taxpayers are, you know, they will be willing to see how that play out, you know, despite the challenges that comes with it. So thank you very much once again, Mr. Killian, for that presentation. And now we'll be going into the tea break session. It's going to be a 15-minute tea break. After that, we'll come back for the panel session. And of course, it promises to be a very interesting one. Thank you very much for joining us. So by the time we step out, we have the tea, coffee, and so on, just outside there. And I believe there are people there to direct us. Thank you. Okay, so we'll be back here by 10:50. Thank you. Hello, can we start coming in, please? We're about to Hello. Sorry. Can we start coming in? But I need Daniel. Daniel. The thing is echoing. I need him to. I don't know what he has done to that. Where's Daniel? That thing is echoing. I need him to put it off. Yes, or Felix. Hello. Hello. I don't. Hello. Is that going? See, but those at the other end, they won't hear. That's the live stream. Okay. Um, can everyone please come in so that we can begin the next session? For those who are still having their tea, they can please come in with it. You only need to be very careful. Okay, Mr. Killian, can we just go ahead? Okay, all right. So the next session is about to begin, and it's, as earlier mentioned, it is the panel discussion, and the topic for the panel session is exploring the tax issues in the maritime and aviation sectors. And this panel session will be moderated by Mr. Killian Kanoba, a partner at Pedabo. And I would, at this point, like to invite the panelists, one after the other. Please come forward to the podium. And the first person I would like to call upon is Mr. Matthew Bojubola, the team lead, special taxes at the Federal Inland Revenue. You're welcome, sir. Next is Mr. Sunday Okeowo, the Director, Special Tax Audit Department, the Federal Inland Revenue Service. You're welcome, sir. Please let us appreciate him. Next panel is Mr. Adeniyi Orebajo, Director, Tax Policy and Strategy, Federal Inland Revenue Service. Next is Mr. Sebastian Odima, the Head, Tax Controversy, Maersk. Let's appreciate him. Thank you very much, sir, for coming. We also have Mr. Kevin Taylor, Managing Director, PAIL. Okay, he's not around. Okay, thank you. We have Mr. Yinka Sumono, Chief Financial Officer, UPS. You're welcome, sir. Next, we have Mr. Abdullahi Aliyu, Tax Controller, Non-Resident Persons Tax Office, Federal Inland Revenue Service. You are all welcome, sirs. At this point, I would like to invite Mr. Killian Kanoba to please come forward to moderate this session. And I would like to hand over to you at this point. Thank you, sir. Sorry, sir. Please appreciate Mr. Albert Folorosho. That was an honest oversight.
Thank you very much, Femi. Like we joke in the office, that was an appraisal issue error you committed. After you have been touted as a future partner of Pedabo, you want to pull down the foundation. Thank you. Gentlemen, welcome. And I'm happy you've all taken your seats and you are all ready. I will go straight on to start with the industry, represented by Mr. Odima. Both shipping and aviation operations, as we know, and as we have heard this morning, are known to be very complex. They are high risk, capital intensive, and low margin, etc. And this has informed the drive to simplify the tax regime adopted by many jurisdictions. What, in your opinion, are these complexities? And why should they be considered in the design of a taxation framework for the sectors in Nigeria? I hope we have a second microphone. Yeah.
Good morning, everybody. I think one is I'm happy to be here. And I'm also happy that the chairman is here as well. Because I think I've always adjudicated that at least that also shows that he's interested in making the industry work and also getting the tax system simplified. You know, I think Iri and I told you that when I saw the changes to the 2020 Finance Act, I'm like, somebody went and changed the law for the shipping taxation and they never consulted the industry. And it's easy for you to talk to the consultants. The consultant does not understand the industry. They just have a bird eye view of what happens in the industry. And one very good thing is that Mr. Kian, my friend, in recent time, two of us have just tried to have a long discussion just to try to understand, because one thing I like about him is the fact that he tried to understand the value chain and then understand the value. So why is shipping peculiar? Maybe I would twist it the other way. Why don't we have a shipping company as a Nigerian? Because it's capital intensive. So for you to buy a triple E vessel, that's about $190 million. And so the average cost to get a vessel is between $100 to $200 million. And two, it's not as if, okay, you just take off, okay, I'm shipping from China, and then the vessel moves from China and comes to Nigeria directly. Before it gets to Nigeria, it would have passed like 5 or 20 different other countries there, and all of them have their different tax regimes, different ways they are taxed. And then at each port, you have a myriad of agencies trying to also place a demand on whatever income you collect. You know, Kirian have tried to, show, he just showed about 9, there are more than 9 actually. But those are some of the complexities that you see, and it's capital intensive, it's complex. And that's the reason, even if you look at the people that drafted the Nigerian tax law, why they decided that there should be a special section for taxation of non-resident shipping companies. And even if you look at the OECD conventions, or you look at the UN model conventions, which of course for us in developing countries, we always tailor towards that one because we feel that OECD is more of the Bujis agreement. The European people also have a specific article for taxation of income of shipping companies. So when you look at that, and when people now say, this part is not related, this part is not related, and I ask them, so if you talk about demurrage, if you never shipped anything with a shipping company, will you pay demurrage? No. They are intricately linked together. And so when you look at those parts, because it's difficult for you to just say, how do I now start preparing, apportioning the income, profit, tax per country, is the reason why if you look at across different countries, both developed countries, Europe, the Americas, North and the Central, all of them seem to have a simplified way of taxing. So the shipping companies are not saying they should not be taxed, but they are trying to it should also make our life simple. We already go through a lot of things just to drop a cargo and then leave the port. So why do you want to simplify? So you try to make it easy. I've always advocated that for taxes, cost of compliance should be easy. And also cost of administration should also be easy. And I always use this example. So if you're going to collect $20 million tax and you spend $19 as cost to collect that tax, it becomes useless. So how do you make it simple that when you want to collect the tax, it's easier for you as the tax administrator to collect, and then as the taxpayer also what? To comply. So that is also the ask of most of the non-resident shipping companies. And I know maybe later on I will talk about the oil-going vessels, because then it's also, because when Chairman mentioned that, I'm like, okay, yes, when we talk about compliance, yes, we can talk about the oil-going vessels, but when it comes to the cargo, the normal shipping lines, most of them will have agencies or representative in the country. So it's difficult for you to say you run away from the taxes. There's somebody to hold on to. But we can also here discuss how do we also make sure that those oil-going vessels are accountable. I think that's one of the reasons why we're here. Thank you.
Thank you very much, Mr. Sebastian. And if you just pass the mic to Mr. Bojumbola, whom I'm shooting the next question to, and please feel free to respond to whatever Mr. Odima may have, to Mr. Odima's remarks. But again, there has been an argument between the shipping companies and FRS on the treatment of demurrage, and this has led to cases in the tribunal, as you are aware. And of course, they have argued that it's a penal charge that is imposed for the delay of containers, and so it should not ordinarily be a taxable thing. While some, of course, have agreed to pay tax, except that they insisted that it should be at the same 2% as in freight. They have also argued that there is a cost to it, and that cost should not be ignored. So should the costs of lost containers be recovered from demurrage revenues pre-tax? And what other costs do you think the tax authority should recognize, for example, in arriving at what should be taxed on this revenue? Thank you very much, Mr. Bodunbola.
Good morning, colleagues, and Pedabo, thanks for the opportunity to be here to share of the breakfast without a breakfast. First, let me congratulate my brother Killian, and that was one of the most incisive presentation on taxation of shipping and aviation in recent history. Very well done. I really appreciate you. There are a number of questions raised in the presentation and in the question and in the comments by my very good, I always call him my sparring partner. From the days when he was at KPMG, we've always had to cross one another. And so it's been a very good experience with Sebastian over the past few decades. Killian, in his presentation, noted that the shipping industry accounts for about 1.87% of Nigeria's GDP. From ordinary economic permutation, you will expect such an industry to contribute not less than 1% of revenue, tax revenue, based on the size of that industry. But amazingly, that is not to be. And like the executive chairman mentioned in his opening comment, there are many factors. One of the factors he had explained. The second factor was what Killian mentioned in his presentation that about 40%, for example, of airline tickets, of the price paid, goes into various levies, fees, and all of that. So the question then is, where do this money end at the end of the day? Where does it go? If it is not going into the tax bag, who among us Nigerians is pocketing this money? I think Nigerians, we need to begin to ask those questions. Should we not be asking ourselves, is it not high time for us to centralize the collection of these monies so that the money can go into one bag, and then we can then be able to properly account for taxes that are collected in the name of government? Another issue that Killian mentioned in his presentation, which I think is also relevant for us to ponder about, is the question as to what is fair percentage, section 14, subsection 3 of CETA. Many of us will recall that I think it was 1996 miscellaneous finance decree that the federal government centralized the rates to be used under section 30. Then it used to be section 26. I think now it's section 30 of CETA, to 20%, and then which effectively brings a 6% gross turnover tax. But there had been many questions raised that should it be one rate, one size fits all? And in view of the peculiarities of different sectors, I think, and this is a very personal view, not the view of the FRS, that we may have to be thinking of decentralizing that rate and to have fit-for-purpose rates. But again, it's a discussion for another day. I don't know whether we will ever get there in this discussion, but I think it's important we answer some very burning questions around the inclusive framework political statement that was made on October 8th this year. I know the Federal Revenue Service is coming up very soon with a public a program where we would address this in detail. But Nigeria is one of the 4 that didn't sign up, just like Killian said. And I wouldn't say whether fortunately or unfortunately, I happen to be the one representing the country in the negotiations. And based on my recommendations, the government accepted that we shouldn't sign. And so if that decision was wrong, I will personally accept responsibility. But with being unable to go into details now, when we are having the program, I should be able to provide you reasons why Nigeria shouldn't sign that agreement. But I can tell you that in my very, very good conscience, I cannot lead Nigeria into bondage to sign that agreement. But I won't be able to give you details now because that is not the focus of this discussion. Now, coming back to what my very good friend here has spoken about, the complexity of the shipping, and I believe also aviation industry. And when we are talking about shipping, it also affects aviation, because I also know the cost of a commercial liner will probably be more than the cost of a ship. I don't know, but it's going to be within the same range. So the same complexity, the same capital intensiveness, the same structure of business, only that while one is going on water, the other one is flying in the air. Now, when you look at the OECD Model Convention, Article number 8, and you look at the UN Model Convention, same Article number 8, talking about international traffic. That's actually the catchphrase within those articles. And if you look at Article number 3, where that phrase is defined, you will see that it's looking strictly at movement of vessels between one country and another country. And to that extent, it's looking at the income attributable to the activities of movement of goods, of passengers, of livestock, and the like, from one country's port, external port, to another country's external port, and has nothing to do with inland transportation. Then, of course, I am very familiar with the commentaries to that article. And when you also read to the end of that commentary, you will see a number of countries who have reservations, who have said, we do not sign up to this interpretation or extensions that have been put to those articles, even including OECD countries. So therefore, the definitions or the explanations in the commentary, number one, are not universally accepted. Number two, they are also not laws. And that is why they are called models. And if you go back to Killian's presentation, there are three ways of treating the taxes in the aviation and shipping industry. One is exclusive taxation in the resident jurisdiction. The other one is to say, all right, we'll do it point for point. When you take anything out of my country, I will deem it to be my income. When you bring anything to my country, I will deem it not to be my income, which is what Nigeria has adopted. And the third one, which is an evolving one, is the tonnage one, in which case it's that's an assumed tax in itself. As to which one is better is a matter of discussion. UK and US and some other countries will agree to residence taxation because they have shipping lines. They have airlines. Nigeria can't sign up to that because we don't have shipping lines. I think the only one that I grew up to know had been dismantled many years ago. The third option of tonnage taxation, again, doesn't work for a country, Nigeria, because we simply don't own shipping lines that are engaged in international traffic. Therefore, the options available is to say, when you come to my country and you earn money going out, then I will have access to tax the income you have made thereby. But I agree with you, we need to simplify the taxing regime. But the question is, how? And what will be that new regime? But I'm sure when all of us put our heads together, we can get there. Now, back to the question that was posed to me. Demurrage. Without boring you with legal interpretations and definitions, he has referred us to the case in Kenya, the case in Philippines, the case in India. But again, we must understand, I not being a lawyer, that judges will pronounce their judgment based on law and facts. But the argument that demurrage is a penal charge, there is no law that I know anywhere in the world that says income earned by way of penal charge is not chargeable to tax. And so, the fact that it's a penal charge still make it a cost that is deductible for tax purposes under Section 24, 27 of CETA. And so, which means, if it is a cost, it must be an income somewhere. And because maybe the accountant team keeps talking, for every debit entry, there must be a corresponding credit entry. So for every cost entry, there should be a corresponding income entry. Now, if income, then the next question is, where is that income earned? And to which jurisdiction is this attributable? And I think the judgment in the Kenyan case readily comes to mind. When a shipper and the owner of a cargo enters into transportation arrangement, it is a point-to-point arrangement. It is a time-bound arrangement. And it is exclusive of unforeseen and unforeseeable extension of business. And so if I have asked, for example, a transporter to take an item from me from Lagos to Elisha, where I come from, and we have designated where to put that item. Based on that, it will give me a charge. And I will sign a contract, and then we will agree. If it has gone there to time and has delivered to time, that is the end of that transaction. But because probably he has a box, a special box, which he has used to transport this, which I must return, and for no fault of his, he is not able to take his box back, that is a different transaction on its own. In which case, he says to me, Mr. Gbojibola, for every 1 hour you keep my box, beyond this our agreed time, you pay. Then, you can't tie that transaction to my original contract. They are two different things. So, and that is what the court in Kenya had ruled. That is what the court in Philippines, and that is what our law says. That is the understanding we have. And don't let us look at this only in terms of demurrage, because demurrage actually is a very small percentage of all this extra other income. There are issues around movement of goods from ports to inland location. That could not have been covered by the freight. If it had been covered, there would have been no extra charge. There are issues around handling of particularly specialized items using domestic resources to do. They couldn't have been part of the freight charges. And when we go back now to where is this income attributable, were those activities performed outside Nigeria or within Nigeria? That again becomes the question. And for those of us who are familiar with transfer pricing analysis, when we begin to do our FAR analysis, function, assets used, risk involved, where are you going to attribute those ones? Clearly, they are attributable to inland domestic resources. And if that being the case, under the normal transfer pricing analysis, they are chargeable to tax in the jurisdiction where those activities are carried out. So this is the technical argument. There's a difference between this and now begin to look at, is it reasonable? Will it promote economy? This is a political economy issue which comes with tax policy, which has nothing to do with the mechanics. So in essence, that income is not freight income. That income is generated in Nigeria by that entity using whatever means it has used, and therefore is chargeable to tax. Now, should there be cost? Question is, what cost? What is the cost attributable to renter of a box in Nigeria? If there is any cost that can be demonstrated as being directly associated with that income. Of course, once it's demonstrated to be, what the law says, is it reasonable, is it only, is it exclusive, is it necessary? Then the tax authority will look at it. Now, when you are now looking at lost containers, question number one, where did they get lost? Is it a container that was rented upon which there was demurrage that got lost, or another container? So these are issues that has to be based on facts and not on supposition. I have taken so much long time. Please, my apologies, but I just needed to bring clarity to some of these issues. God bless you.
Thank you, Mr. Gbojumbola. I deliberately indulge you all that time so that we will say that FRS has given their general reactions to everything that has been said. Unfortunately, other panelists will not have that luxury. I hope you guys will understand. So we are talking demurrage, and we have the man who is front-facing with the companies that are being discussed. So I'll come to you, Mr. Ali Abdullahi. There has, of course, over the years, customers have also complained that when they suffer this demurrage, FRS argues with them that this is also not an allowable deduction. And so if you do not allow the deduction, and then yet you are taxing it also, in the other hand, can you please shed some light on the basis of this, and what is the current practice if it has changed? Thank you.
Okay, thank you, Mr. Killian, for your question. And expenses for purpose of taxation depend on the fact and circumstances of it. Section 24 of CETA have clarified expenses that should be allowed for tax purposes. Those that pass the rentes, those that are wholly, reasonably, exclusively, and necessary incurred for the purpose of businesses. So if you look at this issue of demurrage, it may be interpreted in two ways. One will interpret demurrage as a penalty or a fine as a result of one inability to discharge his responsibility. So once it becoming in that aspect as a penalty, it may not likely be allowed for deduction. But if you are taking demurrage in shipping and in maritime and aviation sector, demurrage is a separate line of income. So it's a genuine income line for the shipping companies and the airlines. So at the same time, it should be a genuine expenses for the taxpayers at the same time. We had a case of Tetra Pak versus FRS, where FRS have denied that deduction of demurrage and added back and taxed the company. Dissatisfied with the action of FRS, Tetra Pak decided to appeal at the TAT. And then the wisdom of the wise men of the TAT, they decided to consider the fact and the circumstances of the shipping company, being fact that they have suffered demurrage. That demurrage is wholly, reasonably, and exclusively incurred for the purpose of that business, so it should be allowed. So if you look at that shipping line, those that are cheapest, of course, you can allow based on this case. But for the shipping line, that's the non-resident companies, then you are going to take your income tax from those companies from the demurrage. Because if you didn't take it, you allowed it in the hand of the importers as an allowable expenses. And you did not take your tax in the hand of the shipping companies. That's tantamount to double non-taxation because it's escaped there. And you didn't take it from the hand of the descent. So to support that one, we still have that case you make reference, CMA, CGMA versus FRS. FRS, you have taxed the CMA, GSM, including the demurrage. So they decide to appear to TAT. At the same time, when they look at that case, referring to the Tetra Pak, they said, no, that demurrage is taxable in the hand of CMA, CGMA. So the tax law, if you look at it, is not contemplating at any point of either double taxation or double non-taxation. So as to come back to your point, if a shipping agent or any company or any person incur a demurrage, it should be allowable for purpose of deducting the tax or computing tax purposes. I think that satisfies your question.
Thank you very much.
Thank you.
I see Sebastian inching to say something, but I will probably not come to you just yet. I will go to my extreme left, Mr. Orebajo. Maybe you have any further light to shed on this question, but while you are doing that, I also want you to answer these. You are in charge of tax policy at FRS. What would have informed the sudden reawakening by FRS to now begin to see 2% as not a fair rate anymore and attempted to charge at 6%? Oh, the mic, please. That's the mic.
Thank you, Kilian, for that question. I will say you partly answered that question for me when you gave that brilliant exposition on maritime and international shipping and aviation taxation. And I remember you said something that a new broom came and was sweeping the corners. The new broom is not only sweeping the corners, it is sweeping the already swept floor that was not swept very well, now sweeping very well. But frankly, because this is about a policy question, in also your exposition, you mentioned in 1928, Britain organized a taxation of shipping agreements internationally. You and I know that up to the Second World War, Britain was the greatest shipping power in the world. China is controlling 20% today. As at that time, Britain was controlling about 50% of international shipping in the world. The British Navy was the largest navy in the world. It covered all the seas. British Maritime covered all the seas. Now, China has 20%, but Britain still controls the maritime sector up to today. Shipping insurance is still routed through Britain as at today. I don't know if any insurance practitioner here will back me out. You cannot ship without your ship being listed in the Lloyd's Register. The Lloyd's Register is based in Great Britain. Any amount to pay as insurance anywhere, Britain gets a share. Why am I saying all this? You see, each country will conduct its affairs relative to its comparative advantages. And when a country conducts its affairs relative to its comparative advantages, taxation is a critical part of those affairs. And internationally, internationally, taxation is the greatest criteria for a nation to grow. It is only in Nigeria that people don't take taxation seriously. A British justice said that two things are certain: death and tax. You cannot escape it. Now, having said that, I'm taking from your lecture again. You mentioned India. If you look at the way India taxes shipping, India takes a middle ground. Why? India is developing its shipping industry. Seriously. You know, India and China are in a race. India is chasing China. India is not chasing anybody. India is chasing China. So it must tax in such a way to be attractive enough to make income and to grow its shipping industry. Now, Nigeria.
able to recover his VAT through the input and output system. That's my question to you, Mr. Akewu.
Okay, thank you. Good day, colleagues and the executive chairman of the service and the organizer. Thank you for having us at this event. Mr. Klihan, I think you are qualified as one of the most recent shipping magnates of our time. Even by going by your presentation today, I was asking myself, was it the Klihan that I know or used to know? Part of what has been said here this morning was that the GDP contribution of the shipping industry is low, and I think we all agree to that. And one of the factors and things that I believe the industry or the Nigerian populace must look into is, why is it so? Because we are starting only from taxation. Maybe we should look at, because what a taxman seeks to tax is the profit. And I also know that the investor, what they seek after is also the profit. So we are only considering what should be my take as an investor after the government has taken its own share, which is the government take. Majority of what of our shipping business is characterized mainly by inbound importations. I was privileged to have started the aviation and shipping lattice office in Apapa, and that made me realize that a whole lot of cargo comes into the country and they return empty or virtually empty. Meanwhile, my law has said that I am to tax the outbound freight. So if I'm taxing the outbound freight and not the inbound freight, then what proportion is that coming into the port, even from regarding taxation? Close to zero. So the freight that we are talking, taxation of the freight, whether at 2% or at 6%, even the demurrage will have been much more a bigger size if our system has developed more than it is. So various factors are responsible for that, but that really is not my call this morning, but it's one thing that we must look to in order to further develop our economy and make sure that we have a most robust GDP. On the question of VAT that he asked me for cargo management companies, I think the issue is this. When you import as an importer, you will require the service or services of somebody who is knowledgeable, who are expert to help in the clearing of the goods. The importer is a trader, and what he will have done will be to source for the goods, make procurement, pay the shipper, and the good will land at the port. Then the man who does the clearing, who interfaces with the government agencies at the port, which he had listed, who is a professional, will help him to pay the duties, pay the VAT, and clear the goods. Sometimes he delivers them. So traditionally, the importer takes title to the good. The documents are in his name. And when he pays, he hands them over to the agent who makes the payment, and all of those are reflected in his name. Then he passes it on with his own fees and charge VAT and all of that. So getting input tax from the FRS in that respect shouldn't be a problem. And of course, if the item is a capital item, our law says that you capitalize them, so no input to claim directly from output. But the model that Kilian is trying to present now is, you have an importer in quote, somebody who should have gone to do the importation, but he has given a single and all-inclusive contract. I say, just go, use source, sometimes procure, import. Sometimes you have to be the one to fund it. You make the payment. I just don't want to bother my head about all of this. My own is deliver at my factory or deliver in my warehouse, whichever way. Then I reimburse you. So those documents will not be coming in the name of the supposed owner of the product or importer now. So with that, the model has been changed. And if you have changed your model and doesn't fit into the law, then we need to look into what does it fit into. And if we borrow, like Mr. Wojwola said, from transfer pricing analysis, we'll be looking at what exactly are the functions that the supposed person has done now. He has changed from being a clearing person to an importer or a trader by the time we analyze it. Because he has sourced for the product, he has made procurement, he has done funding, he has done warehousing, he has done logistics, and for all of that, they were not done for free. He's going to charge for that and will earn an income on it. So by the time he's submitting one single invoice, our expectation is that he will charge VAT on all of that. And once he has charged VAT, then he remits that, then the man who has taken over the goods can therefore make that claim. Kilian is already saying to me that time is not our friend. Thank you.
Thank you very much. On overdrive now, we really are short of time. So I will come to Mr. Sumonu. I will bundle two questions in one for you. One, you are involved in shipping, you are involved in aviation, so you are involved in clearing of goods as a business. And you clear on behalf, you clear on behalf of your customers, of course. Now, how are you able to deal with this issue that Mr. Okewo just spoke on now? But the second leg of the question is the amendment to the VAT Act in the 2020 Finance Act that has, to the effect that services rendered by a person that is physically present in Nigeria are deemed supplied in Nigeria. And I know, this is irrespective of the location of the recipient. And in your own case, I know that you are involved in these cross-border transactions with your affiliate UPS companies. When you receive goods from them to deliver in Nigeria, you get to charge them for that service that you have performed. So how are you affected by this amendment?
Okay, thank you. Let me first of all thank the chairman and the entire Pedabo team for this session. I think it's been eye-opening. The concern I have is that from tax law perspective, we treat logistics company the way outsiders treat an Africa. If you get out there, somebody will not ask you, once you are black and you are not looking like an American with American accent, they ask you, how does a monkey look in Kenya? Even when you have never gone outside Nigeria, they all look as if Africa is just one hamlet. That is the way tax look at logistics to a large extent. But other logistics, we have variety of businesses. We have warehousing, we have truckload business, we have less than truckload business, we have small package, courier, we have cargo, ocean, cargo, grand cargo, we have freight. All these businesses, sectors have their peculiarities as related to tax. And when you don't look at the granulars, you bring ambiguity. And that is one of the issues that actually comes to play when you talk about VAT. When you asked that question, input and output, I just laughed. I won't try to display an expertise because I'm not going to take Pedabo out of business. We appreciate this ambiguity, and that is why we have our tax consultant. And I must tell you, I'm an accountant, but we rely on their advice. And what they have actually advised is documentation. Documentation is key. No matter what you do, if you have the right documentation, the tax guy will come, you will reason together. But we know Nigerians, we are poor bookkeepers. Yeah, I have seen that in the last 20 years of my career. So, back to, to be specific now concerning that question of VAT and, okay, let me leave that. I think we had an issue with how to get what we bill on services rendered to our sister companies outside Nigeria. We had quite an issue with that initially. But we sat down with the Inland Revenue guys, which I'm very happy that now we have fantastic professionals in Inland Revenue. It wasn't like this 20 years ago. I can tell you that. We sat together and they said, okay, guy, if you have done something, for example, somebody pick a package at origin outside the country. The package comes through to Nigeria, I'm to deliver. And for doing that, certain income must come to me, right? It's okay. Inland Revenue critically told us, we look at the law, this will be taxed like this will be vetted like this. And we got across our task force and said, that is what the law says. And trust me, I work for a company where you don't joke with compliance, right? So based on that, the income you are getting for doing anything for anybody outside the country will be taxed, and you know, and that is taxed, vetted and taxed. And if you have done something for your sister company and you need to take the money back, the income has actually originated here. This is the point of incidence, right? And the deemed profit and the rest comes to play and is taxed accordingly. So that is the way it should be. Yeah. The only thing that I just know is that we need to break down the categories that we have in logistics. All encompassing tasks, trying to cover everything, will not really work. Thank you.
Thank you very much, Mr. Sumodu. Frankly, we are supposed to have ended this session, but I have a question for Albert. I don't know, those of us who are joining virtually, if you have any question, I hope you must have typed in the comment box or in the Q&A box. We will be able to take one or two just when I'm done with Albert. Now, what are the challenges faced by tax professionals? I know you are one of the leading ones around in handling issues relating to non-resident shipping lines and airlines operating into Nigeria. How can these challenges be addressed? Do you think an overhaul of the statute is necessary, or would you recommend an administrative initiative? Thank you.
Okay, thank you very much, Killian, for the earlier presentation and for the question, which is like, can you represent my paper again? because that is exactly what you have asked me.
Rules in the industry.
All right, but okay, so quickly, I stand on the existing protocol. Quickly, I just speak to a few of the issues that have been raised. Let me start with the chairman. He has sent a message to all the foreign, unfortunately they are not here, the foreign shippers that have been lifting crude. Like Sebastian said, the cargoes are always mostly represented, and so there is nowhere to hide for them. It is those crude lifters who sometimes, they don't even come into the Nigerian territory. They lift offshore escravos, and sometimes beyond what is called the contiguous zone into the continental shelf. And they can say that they are just seeing Nigeria ahead. We did not really come here to lift. Some of them, the only agreement they have is with the pirates that probably will struggle with the crude with them. They would rather discuss with the pirate than discuss with the government that is supposed to collect up. But if you look at section 14, they are truly fully covered, because it says carriage of passengers, goods, livestock out of Nigeria. Okay, so the question is, at what point or how can they be tracked? Most of them don't have agents, they don't have representation in Nigeria. And again, if you look at the double taxation provisions, some of them, the ones we have, I think with is it South Africa or Italy, on shipping, okay, which is the one-legged, the 1%, okay. So that is also an area that they can stand on. And so it's a big task before the FRS. I remember recently when we talked about cost oil, tax oil, and then there was a thinking that maybe PPT will now be paid in crude. And so FRS will need to have some officers that are specialists in crude collection. So maybe we will need officers of FRS now that will be experts in shipping and being able to recognize how to track these non-resident entities. Because if they truly have not been paying, I'm sure there's so much that is hanging around there. Okay, so that's one. Two, the issues around non-passage or freight income that are being taxed in Nigeria as amended by the Finance Act. Okay, so my suggestion has always been, is there a way we can have just a straightforward percentage instead of asking those companies to come up with their account, which is going to, contain several costs that we cannot verify to see whether those those costs have been incurred or not. Maybe that straight percentage of 2%, okay, even though Mr. Suggesting 6%, okay. but I think a straightforward 2%, which will be a straight income and can easily be, those small percentages are not small, especially when you see state running after 50 naira stamp duty. You know that 2% is really not small. So if you ask me that, how at consultants or what advice do we have for taxpayers, majorly in this field? Most of them that have representative, that are involved in this cargo business, yes, the advice is that, there's a need for them to, they file their returns, okay? So the question around VAT for them, particularly when it comes to rendering service to a non-resident, the law is very clear. And so if the law, I always advocate, even if it is something we think, the FRS think that this is the normal thing, can we put it in the law so that it can be clearer? Okay, there are things that, no, that's how it should be. There was a client yesterday and they were complaining that some tax people came and they were attempting to carry their laptop, blah, blah, blah. I said, okay, so which part of the law have they pointed out? Did they come with a search warrant or power to search? And so let us make everything very explicit, okay? And the taxpayers will most likely be able to comply. Finally, on UPS, which means that, you know, at the port, you definitely have to pay the input VAT, okay, as you are more or less the importer on record. And so the persons you have imported for will probably not have that documentation. So you are permanently going to be maybe at a credit, okay? I don't know whether FRS will reimburse those excess credits, and then you can distribute to and you can distribute. Chairman is not happy with this. But some money is hanging somewhere. That's my view. Thank you very much for listening.
Thank you, sir. Thank you.
Sorry,
do we have any question from
just
the
1
online?
minute, 1 second.
Okay.
Since Albert is suggesting a refund and a distribution, I think we will send him the check to sign.
Thank you. Do we have any questions from the online people? Maybe we'll just take one or two because we really are now late.
Okay, so the question here is, how do you deal with taxation of demurrage charges received by foreign shipping companies on goods shipped into Nigeria, bearing in mind that their taxation should strictly be based on outbound shipping activities? So this is from Folu Smith.
Thank you. I'm sure that has been addressed. I will give 30 seconds each to apply because he's been begging me. And I know Sebastian is at his edge. I will also give you 30 seconds. Let's make the best use of it, please. Your time starts now, Abdullahi.
Okay, thank you, sir. Yes, my friend, you know this meeting started in my office. Well, I would just want to make a comment in response of the GDP, the low GDP that we are all talking about, of the maritime and shipping industry. Based on the figures I have, in 2020, they contributed about 20 billion to Nigerian revenue, 10 billion VAT, 9.9 billion naira CIT. Though the VAT you can still find out is the demurrage that we are collecting. They are just collecting agents. They are not the ones that are contributing. So we are still coming back to the fact that they only contributed 10 billion naira as CIT, the shipping line. For 2021, this is a figure of 10 years, as of 10 months, as of 28 October. They contributed about 12 billion for CIT and roughly about 10 billion naira for VAT. Still the same line, VAT is collecting agent. So this is to both go to the fact that, yeah, that line is still very low compared to the GDP we are expecting. And I think I'm happy God have answered my prayer since my chief executive has raised that weight cargoes, because, you know, the weight cargoes, I'll just have to just a second. Yeah. In 2020, about 14 companies, those that are lifting crude oil was brought in. I engaged those consultants from March till August when he was convinced to bring those people. They paid about $8 million, translation about $3 billion. But this year, when they came, they just filed 1 million naira, or less than 1,900,000 and something. So the low GDP is still very low in that shipping industry. Just what I want to chip in. Thank you.
Thank you very much. Sebastian, 30 seconds. Give him. Yeah, thank you.
30 seconds, because I'm dealing with 4 FRS people. So if you calculate the 30 seconds, that is a lot of stuff. So let me start first. You know, I like the way Mr. Bonjibola mentioned it, and then he addressed one of my issues, and I just told him, you know, it's easy for us to say, oh, they make up about 1.87 of GDP, but they contribute this amount, and we're all looking at CIT. So under the shipping, NIMASA, MPA, those just two, for a shipping industry, you pay between $80 to $120 million to them every year. And that part, FRS will not see that part when they do their own calculation. So it's important that when you are comparing apple with apple, not apple with pineapple. Because it's important. So that's what, when he now said about, I like the part he talked about, if you can consolidate this part. Because you see, when people talk and say, oh, our tax to GDP ratio is 6%, I always ask them, how did you calculate it? Are you just calculating income tax and VAT? If you want to do that, at least I've calculated that I've been seeing South Africa calculation. Even the road tax that local government will stay and then use something to block your car to collect, you have to be accumulated and calculated, included into that calculation for you to get, because we'll be using an estimate for a very long time. That's one. Two, demurrage as an income has never been debated, whether it's an income or not. It's an income. And even in shipping line, we normally don't even use the word penal charge. We say it's a contractual penalty or liquidated damages, because that's why you can also claim the deduction. So, and when I have the discussion, I'm like, yes, you can have OECD. OECD's guidance, like you said, is a model. But each country now needs to have, what exactly do you want to tax? Kiriam mentioned about the Kenya case. The Kenya case, that's also the one they lost in TAT, to the KRA lost. At least I know I was involved in that case.
Thank you very much.
But what they did in 2019 was now go to update their law and say, oh, yes, this is what we have. But anything you collect inside our country, demurrage, handling charge, whatever you want to call it, is taxable in Kenya. And I think that's where we're going to. And if you take that position, that's right. It's our law. Like he mentioned, make it into a law. If it's a law, that is the law. There's no need going to make it arbitrary and then everybody's going to court. That's where, when I speak about cost of collection. So if you can collect 10 million today because the law is clear, and then because it's not clear, and then I have to go to court and spend another 6 months in court, it does not make sense. Both of us are losers, because we spend time trying to contest that. I also spend time trying to contest my own part. But one of the things I also mentioned, because I need to miss a practical issue, when I said we're not consulted. When they said, oh, prepare financial statement, my boss here, and I asked them, PwC have had our financial statement for a very long time. And every time we speak to them, they say they are still struggling to understand how to prepare the financial statements for a non-resident shipping line. And I've asked myself, once you've defined the income that are taxable, freight, demurrage, whatever, anything the shipping line collects is that shipping income, is shipping line income, whether you are calling it freight or not. We can now try to use the decentralized rate part to say, for this particular industry, we understand that, yes, their margin may be low. What can we do? And once you do that and put it in the law, it's law. And I was telling them it's easy to collect, because then when you come, it's easy for you to secularize all your customers and say, oh, you say this is how much you collected. If I sent a letter to all the companies, all your customers, and then they come back and say, this is 100, then I will know it's easy. Collection becomes very simple. I don't need to start looking at cost.
Thank you. I must stop you now, Sebastian. And the conversation continues. The conversation continues. We'll take it outside this forum. And I'm sure we have all been enlightened by this session of the program. Thank you very much, my distinguished panelists, for joining me to have this conversation. Thank you very much.
Okay, thank you very much for this session. Thank you to all the panelists. At this time, we would like to take a group photo with the chairman. Chairman, can you please respectfully come forward to take a picture with the panelists, please? Yes. Okay, thank you, sir. So before you take your leave, we have some gift items for our panelists and the chairman. So, Mr. Killian, can you please present the... Yeah. Okay, you want to do that?
Okay, Mr. Orebajo, please step forward. Yeah. Thank you very much. Yeah. Okay. And to our shipping line representative, Mr. Sebastian. Like I said, the conversation continues. Okay. And to our friend at the non-resident taxpayers office, Mr. Ali Abdullahi. And thank you, Mr. Abodunwola, for finding time to come. It's always very enlightening having OECD conversations with you. Thank you. And Mr. Sunday Okeo, I'm still the Killian, you know. Okay. Mr. Sumonu, thank you very much. Okay, that's all. Okay, thank you very much. And of course, we'll have a handshake with the chairman and photographs, yeah, if he doesn't mind.
Okay, while the chairman takes the pictures with the partners, we would like the panelists to take that. Okay, so can the managers please come forward to take a picture with the chairman? Then afterwards, we'll have our participants as well take pictures with him. Thank you. Okay. Sorry, sirs. All right, thank you. Thank you. Sorry, some of our participants. Okay. All right, thank you.
Thank you very much, sir. Thank you.
Okay, so at this point, I would like to call on Mrs. Kuteyi to please give the closing remark, and afterwards, we have arrangement for brunch and networking. So thank you.
Thank you very much, Femi. It's already afternoon. Good afternoon once again, ladies and gentlemen. Please permit me to stand on existing protocols as I take the vote of thanks. I know you want to agree with me that it has been a very good use of the past 3 hours. I believe so, isn't it? Thank you. Thank you very much. And I know definitely that wouldn't have been possible without the involvement of everyone here present, from our guests, the panelists, the executive chairman, you know, and the Pedabo team. And I want to say a very big thank you to each and every one of you for making this the great success that it has turned out to be. Thank you so very much. Okay, so specifically, I would like to appreciate the executive chairman of the Federal Inland Revenue Service, Mr. Muhammad Nami, for this partnership with Pedabo, you know, on this event. We want to say thank you. We want to say a big thank you, and also for your presence, sir. We know how extremely busy you are, you know, for gracing this occasion. We want to also say a very big thank you to you. And then to our paper presenter of the day, Mr. Kilian Kanoba. You know, that was, I've been hearing about that paper presentation all through the tea break and what have you. That was a very great one. Thank you so much, Mr. Kilian, for those deep insights into the general tax landscape of the Nigeria shipping and aviation industry. And like you said, the conversation continues. So we expect to take it from here. And also to our very seasoned panelists, we say a very big thank you for your invaluable contributions. You brought your experiences, your expertise, your knowledge, and all, you know, to make this event that it has been today. We thank you very much. Mr. Matthew Bonjubola, thank you from FIRS. Mr. Adeni Yorebaju, thank you. Mr. Sebastian Odima from Mask, thank you. Mr. Sunday Okeowo from FIRS, thank you. Please, a round of applause as I mentioned their names. Thank you. Mr. Yinka Sumonu from UPS, Mr. Abdullahi Aliyu from FIRS, and of course our managing consultant from Pedabo, Mr. Albert Folorenshaw, and our moderator for the day, you know, paper presenter, Mr. Kilian Kanoba. Thank you so very much. Thank you very much. Okay, and also to our amazing clients, our guests, both physically and virtually. Of course, this wouldn't have been what it is without you. We say a very big thank you to you, and also to our prospective clients that are seated here today. So we know from here you can, you know, reach out to us via our website, www.pedabo.com, for your services, insurance, and basically general financial advisory and tax advisory needs. Thank you. So for me, I would like to leave us with this thought. The chairman has talked about the fact that everybody needs to, you know, get on their toes. It's important that we pay taxes. I would like to leave us with this quote by Lowell Nussbaum, which says, "A tax is a fine for doing something right." A tax is a fine for doing something right, and a fine is a tax for doing something wrong. So whether or not you pay it as doing it good or bad, you still end up paying taxes. So it's inevitable. So I would want to encourage us to do it the right way and pay our taxes as I went you. Thank you so very much. And thank you.
Okay, thank you, Bumi, for that wonderful closing remark. And just like I said earlier, from now we'll be moving to networking stroke brunch session. A wonderful day. For me, it's wonderful hosting everyone here. Once again, thank you for making up time to be here with us. And I believe that we've all had a very, very wonderful time with us. Thank you very, very much. So we may please proceed. We have brunch, and everything ready for us. Thank you very much.